The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Quick checkup on Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at 42,054. Bitcoin is sliding about 3.4% over the past 24 hours. And the CoinDesk Ether price ETX index now at 29.19. ETH also taking a step back over 5%. And the new DFX CoinDesk's DeFi index is trading at 556. DeFi is down over 4%. All right, and joining us now to discuss the crypto markets is Ben McMillan, Chief Investment Officer at IDX Digital Assets, which has developed a suite of risk-managed digital currency indices. Welcome, Ben. And so, from what I understand, IDX has recently has sold fully out of Bitcoin exposure before the recent price volatility, finding worrying fundamentals. Tell me a bit about that.
Yep. Well, it's good to see you, Christine. I mean, what's interesting too is if we kind of zoom out, 2021 has really been the year of China and regulatory actions. And what's interesting is China's starting to ban Bitcoin several times over the years. In fact, they have a saying over there: "Much thunder, little rain," when it comes to these threats. But this time they meant it, and that's been the culprit behind most of the downside volatility this year. We saw it back in May when China banned mining operations. There was nearly $1 trillion of market cap was wiped out in a matter of hours. Fortunately, at that point, our models had been in cash for a couple of weeks, but our alerts started flashing red when this was happening. We saw it again last weekend when there was over $1 billion of Bitcoin liquidations across various Chinese exchanges, which interestingly was almost certainly in anticipation of China's official declaration that Bitcoin transactions would become illegal. And at that point, again, we were in cash. And I mean, generally what we're looking for, and we've always been telling clients that we get the question constantly: as Bitcoin matures as an asset class, do we think that volatility is going to go down? And we've always said the answer is no. There's just the threat of China in particular, regulatory actions in general, coupled with just the highly speculative nature of the asset class. It does not lend itself to a decreasing volatility regime. And so that's one of the things we focus on and that's why we launched these suite of risk-managed products, ultimately to allow it to become more consumable and more accessible for institutional
I find it really interesting that you fully pulled out of Bitcoin. I wonder, what price did you sell it at?
Yep. So if we go back to, like I said, really there's two big vol events. So back in April, around middle of April, our models went to cash at around 55,000. And I'll preface this by saying all of our models are indexed. They're calculated by S&P, so people can go to our website. They can go to S&P's website. They can pull down these indices themselves, track them real time daily. But back in April, our risk managed Bitcoin index went to cash at around 55,000, which was a couple of weeks before the big May sell-off that saw Bitcoin retest 30,000, which was a 50% drawdown. And then again, we went flat again last weekend, right around 48,000. Again, before Bitcoin retested 40,000, so avoiding a 20% drawdown.
Hi, Ben. So a couple of questions about this. So I actually have a slightly different take on kind of the China disruption. I mean, you're right that China does tend to cause Bitcoin to fall, but it's been recovering pretty quickly. And, the trajectory has generally been upward. In fact, we've seen compared to times past, the hit that Bitcoin had with the China news was actually relatively small, and it recovered pretty quickly. So I actually have kind of an opposite interpretation. It seems that Bitcoin is becoming more resilient to China shocks. So I'm just curious, what you think about that. And then also in terms of volatility, again, if you look over the long term, Bitcoin is still kind of moving in an upward direction.
Well, I don't disagree at all that Bitcoin is becoming more resilient to the China shocks, and that's a good thing for the Bitcoin community, particularly the banning of miners back in May. Again, we saw an immediate sell-off after that, and then it trended downwards. But ultimately, Bitcoin did come back a little bit. Fortunately, allowed us to get long for a little bit of that uptick, and importantly, that moved a lot of the concentration away from China. One of the big issues among kind of practitioners and developers has always been the fact that so much of the mining concentration was in mainland China, which represented this theoretical risk vector that now has been kind of muted. Same thing with forcing Bitcoin transactions to be illegal. China's always had a very disproportionate impact on Bitcoin. So ultimately, this is good in terms of, and I agree with you. Bitcoin has kind of shown its resilience as a decentralized network against these China impacts, and we would expect them to continue to mute over time.
So what would you need to see in Bitcoin and crypto that would make you comfortable to get back in and buy again?
So generally at these levels, we're looking at a number of things. One of the key things here is kind of how long does it, what does it retest at, and how long does it spend at that support level? So what does the support level ultimately end up being? And that's just a function of market participants, supply and demand, kind of battling it out to see where we end up. We're also looking at a lot of on-chain metrics. One of the things we're very interested in as quantitative, ultimately hedge fund managers, is all the transparency we can get from a decentralized blockchain. So we're looking at things like active addresses, which have come down a little bit on Bitcoin. Transactions have come down a little bit on Bitcoin. Part of that is the efficiency of the Lightning Network. But again, typically we would expect that to increase a little bit as participants, dry powder coming in off the sidelines to provide a bid. So we're still looking for we would need, for us to go back long, we would be looking for kind of sustained strength, both fundamentally and from a price perspective, in terms of Bitcoin buyers kind of returning back to the market en masse.
Just one quick question, finally. So if you're getting out of Bitcoin, are there other cryptocurrencies that you feel better about or that you feel more confident about investing in?
So that's an excellent question. And so we have models for Bitcoin, we have models for Ethereum, we have models for DeFi. And so we want to provide a suite of risk managed options for clients. We're sort of agnostic as to which one. We have folks that are 100% focused on Bitcoin. A lot of our more institutional investors are starting to migrate directly into Ethereum or DeFi. The value prop for DeFi is interesting, and we saw actually on the back of this latest China ban on crypto, the DeFi exchanges really won the day. If you look at DXDY flipped Coinbase in terms of daily volume for the first time ever, and so you're seeing the value prop of DeFi play out real time, like you did back in May, when a lot of the centralized exchanges went down, the morning of the China sell-off, but the DeFi exchanges were still up and running. And so that we're seeing a lot of institutional interest in Ethereum and DeFi. But yeah, in terms of other coins, the asset class in general is an exciting space.